Hi there mates, our topic for today's video is about the impact of catalyst or news on the stock price movement. Being aware of the latest industry news is a must for beginners and professionals alike. Why media industry flourished should be no-brainer. Every trader and investor needs information on what is happening in the industry and be able to assess its potential impact on his holdings. A trader always browses for that critical news or information that can create opportunity for gain or loss in his stock's price run on short or long-term basis. In this video, we explain how catalysts can impact the price run. Let's start with the chart on the previous day, which shows a potential for downward trend as shown by numerous red candlesticks. We also notice numerous gaps in the price run. For quantifying the downtrend potential, we use the Fibonacci application and place it in the range of recent lows and high. The latest low-high Fib run of 27.0 to 31.45 price shows its potential levels. A check shows there is a probability of downward extension reaching 200% Fib level at 22.5 that matches a 90% Fib retracement of the last price run from low of 21.5 to 31.50. With initial idea of the potential price run, we define the trend with a type of Elliott Wave correction pattern as shown in red-colored three-wave run. The conviction for downward trend is complemented with a previous gap. Traders are conscious of the still unfilled gap, thus its pull-down effect on the stock price run. However, after trading hours, news about a better than expected quarterly GDP growth for the country came in. Naturally, traders and investors are happy about the better than expected news. As positive catalyst, it is seen as a market mover. But how far can it go is the question. The euphoria of the trading community was seen in the gap up in the morning trade. A gap in price run is a psychological representation of the trader's bullish sentiment. Thus, the rush for buying activities leading to a gap. Mentioned as I must, a trader, whether he's a beginner or professional, needs to be aware of what is happening in the industry and economy. Earlier, a well-known think tank cautioned about false rally and instead recommended selling on a hope rally, essentially a dead cat bounce. On the chart, we notice that the price run met a resistance just before its MA20 boundary, which is marked with red line, which is also a Bollinger Band resistance indicator. At the end of day chart, its price run was not able to refill the previous gap. It retraced down below its opening price and left a new gap deemed a new target for refilling. Generally, the price run and resulting indicators suggest that it is forming an Elliott Wave ABC price correction run with bias as part of a bigger three-wave WXY downtrend. Supplementary analysis on the international market also cautioned that most stock price rallies today tend to be an opportunity to sell one's stock holdings. This and other analysts' view about today's stock market reflected well on this particular price stock run. There was a short rally, a dead cat bounce, and then faced with strong downtrend potential. A check using Fibonacci application showed the 5-day run was generally downtrend with the latest price rally, a dead cat bounce within the Fib's bounce range between 50% and 61.8% downtrend retracement for 3-wave run. Another check of Fib application showed an alternative smaller run as again a bounce level at the same range of 50% and 61.8% run going down to 22.50 price level. The potential cumulative gain in this correction caused by a day catalyst can reach up to 30%. It breaks down as follows: 10% for 26.35 to 28.75 run, 10% for shorting opportunity down to 25, and 10% for reaction up to 27.50, completing a 3-wave run. The overall trend in bounce indicators were identified with inputs from Elliott Wave theory for corrections and its potential price levels quantified using Fibonacci application. We can see that the past pricing history, including gap positions, were well within strong Fib levels that make good targets for selling and buying. The impact caused by news catalysts on the stock price trend cannot be trivialized. Utilized properly, they present opportunity for gain through profit in selling or repositioning to lower buying costs. But one needs eyes for the critical news or information. Trading principles like Elliott Wave theories, impulse and correction trends, and quantifying such trend using a form of mathematics called Fibonacci Ratio are one of the best references if one will develop certain strategy in facing the giant called market. We'll discuss these theories in more videos to follow in Victor's Point Plus YouTube channel. Subscribe to get latest updates.